All right, let's get the view of a specialist. Simon Wardell is an oil analyst at Global Insight. Thanks very much for being with us, Simon. First of all, on the Nigeria question, do you think we could see a disruption in supply from there?
It's possible. We get actually several disruptions from Nigeria on a regular basis, but I think that what's happening now is obviously fairly critical in terms of this widespread strike. We'll see how well supported it is. It's certainly a change Nigeria needs to go through. As we heard, they import so much fuel, yet are a big oil producer, and I think that the government's going to want to stay the course. But yes, we might see a little bit of disruption.
Nothing that we're not used to out of Nigeria. Let's talk about the oil market overall for the year 2012. You describe it as a push and pull situation, with the global economy pulling on the price, and then global geopolitical concerns pushing it higher.
Absolutely. It's sort of this precarious balance we have at the moment, and we can see how the risks could evolve over the next few months. If we manage to get through the Eurozone crisis, we could see prices moving quite a bit higher as a result of some of the geopolitical tensions, not just Iran, but of course still issues in North Africa, throughout the Middle East as a result of the Arab Spring. On the other hand, we could see prices pull back. I mean, if the situation in Iran cools down and it proves to be more saber-rattling than anything more serious, and the Eurozone still has ongoing problems, we could see the price go the other way. So it is very difficult to see which way the price is going to go.
Does this mean more volatility throughout the year? Does it mean a trading range? Does it mean prices stay flat?
I think it's a trading range for the short term and volatility, but then I think at some point we're going to get a direction. And it's either going to be a fair bit higher or quite a bit lower, depending on which of the two forces evolves and emerges as the real driver in the oil market.
So let's talk about Iran for a moment, because we're going to get a decision from the EU at the end of January. Let's say they do go. Well, do you expect them to go for an embargo, first of all?
It looks very much like that's going to happen. So it looks like Europe is actually going to have to find alternative sources. That's about 450,000 barrels a day that Europe currently imports of Iranian crude. They'll have to find alternative sources for that, and Iran's going to have to find alternative buyers. That means they're probably going to have to discount a little bit, but ultimately we're probably not going to see too much in the way of a disruption just as a result of this EU embargo. A little bit of trading patterns moving around a little bit, but the overall supply-demand balance shouldn't change that much.
Now, when you say Iran may have to discount, this is the way that sanctions work, right? Because people put forward the argument that there's always a buyer, China will still buy, but Iran will be forced to discount its oil in order to sell it all.
Yeah, they have to find new buyers. And ultimately, oil is a very fungible commodity, but you still have to go into the market, find new buyers, and to do that, as you say, you may have to discount. So it will hit the Iranians on an economic scale. It will damage their economy to a certain extent.
When we look at the price of oil right now, what is priced in? Is an EU embargo already priced in?
I think it certainly is being priced in right now. It's looking more and more like an almost certainty at this stage. So I think most people are pricing that in. As I say, it's not likely to have a big disruption in terms of the overall supply-demand balance. Some trading patterns, some difficult for some refiners, those sorts of things. But overall, it's not something which is going to change the global balance.
And this question of the crucial Straits of Hormuz, could Iran, does it really have the military capacity to block that passageway?
Well, it's a very narrow passageway, and certainly there's a lot of trouble that could be started. Whether they could do it for a long period of time, I don't know. I think it's unlikely, and at the moment it just looks like saber-rattling threats to try and scare people. It doesn't look like it would be in Iran's interests to actually do this. They do have oil to sell, after all. China wouldn't be terribly happy if this happened. So I think that Iran is really just
saber-rattling.
Saber-rattling at the moment.
What about the rest of the geopolitical picture? Because you have Iraq, the security situation could be deteriorating there as American troops withdraw. You still have tensions in Syria, but then at the same time you've got Libya coming back and producing much more.
Yeah, it's still volatile. We're still dealing with the consequences of the Arab Spring, and also, as you say, with the Iraq War and the changing nature of the conflict there with U.S. forces pulling out. So it's still very volatile, the whole situation, and there's still a lot of risk in North Africa. Libya is coming back strongly, but it's still not by any means a settled situation there.
One final question for you, because we've been talking about shale gas. Are we becoming less dependent as a world on Middle Eastern oil?
To a certain extent. There is growth elsewhere. Certainly there's growth in Brazil, in North America, but the Middle East is going to remain incredibly important for oil.
All right, Simon Wardell, thank you very much for joining us.